live on Dallas Trading Floor. Well, we're getting closer into the week. The market has rebounded a little bit, not so much, and it looks like you know, we're headed up. But it's very, very important right now. We've had violations on several of the indexes, like the S&P 500 and the QQQ. We got to be real careful right now, as the market is still not. We really don't want to be fully invested right now. I know that there's some bounces. We want to look for very good setups right now. So we got to be a little bit careful. I just want to be kind of cognizant of that. I'm currently only about 50%, only about 75%. I'm about 75% in cash, and so I'm out of the market, not really out of the market, but I'm looking for opportunities. So right now, it's not a good time to be, be putting everything on the table. It's good to be having a cash reserve, because we still don't know if, we've gotten support here. But we're in right now. The market is in a uptrend under pressure. So I kind of want to, go through that with everyone here. So the market is, it's still in an uptrend under pressure. So we've got to be very cautious right now, more so than more so than we normally would be. We have to be a little bit cautious on the market, and the uptrend is still under pressure, and basically the signal from the Fed is that they're going to the taper, and so we're going to see some interest rates possibly moving up. The Dow has been moving down. So right now it's just a little bit dicey to really put on huge positions. Here's what I recommend. Instead of going in with a full or even a half position, consider possibly a quarter position, because what I'm saying is that with the uncertainty, if you're going to go in and buy stuff, there is stuff out there. You want to kind of go smaller right now. So that's kind of my, that's sort of my take on it. You want to go a little bit smaller. Just wanted to also update you on Nvidia. Nvidia it rose about 3% today, and so it's getting some strength. It looks like it got some support at the 10-week moving average, and you know, but the shares basically peaked on August 30th at 230.43. So, I still have some Nvidia, but but I did sell my positions on based on stops. So, we it looks like we've stopped the decline. I don't want to, it's not ever very good to own a stock if it's below the 50-day moving average. And so it just that's a really big thing. So I lightened up tremendously, but there is a dip right now, so we possibly could potentially look to start coming into the stock. This would be a bargain kind of area, that where you could buy on Nvidia. So it's not necessarily bad time to be in Nvidia, but I just think it's careful. I think we got some support today, but you never know. This is a tough market to trade. Nvidia is a premier stock. It's an investment grade stock, and I'm still very, very bullish on Nvidia. But we got to be a little bit careful here, because if the market goes into a full retreat, even a stock as strong as Nvidia is going to retreat. So this possibly, if you might be a good time to nibble here. Maybe a quarter position might work. I'm looking possibly tomorrow to see how it holds up. Probably to go in and do something on that as well. But Nvidia definitely should be on your watch list. It's a premier stock. It looks like it's gotten some support, and maybe we can come back into it. This is sort of the weekly chart here. Just kind of want to show you, it got support right at that. It's getting some support right at the 50-day line. So that's a very, very good sign that it didn't drop below the buy point. So that's looking very, very good. Yesterday, of course, it was tough, because yesterday it was just it was just one of those things where it wasn't looking right. And but hopefully Nvidia has gotten some support. I think it probably has, and I'm going to probably be starting to add back into my position. I still have a small position. I did sell off some of it, as I did sell into strength on this a little bit. but I'll be coming back into NVIDIA with some of my cash. But this, I kind of want to put this on everyone's radar here because it potentially could be a very good opportunity. Also wanted to show you the stock of the day. Now this is also very interesting. This is bounced off of the 50-day moving average. So this is something that you might want to look at. It's Snap, and I think everyone pretty much knows Snap. Now here's what I like about Snap, and I may be going into this one as well. There is a buy point at 80.95. Currently, we're at 78.44, so we're a little bit early before we're a little bit before the actual buy point. I do think if it holds tomorrow, you possibly could start nibbling on this one, maybe a quarter position. I definitely think it's worthwhile. Now, it's true. We may get it. And this is the thing. It's dangerous to really put on big positions right now because of the condition of the overall market. We are pulling, the overall market is, it's fragile right now, and it may pull back. So, so that's why if you do decide to do this one, be very careful. Put it in a very small position. It's kind of a starter position, a quarter position possibly, and put your stop losses really tight on this one. If you were to buy Snap right now at 78, I would recommend having like a $75 stop loss on this one, just because you need, if the whole market moves down 10 or 20%, which it very well could be because we've moved from a confirmed uptrend to an uptrend under pressure, this will get damaged as well. But right now, Snap is set up very nicely. It's coming off of the 50-day moving average, and it's looking pretty good. And it's up $2 today, up and with 30% up, 30% up in volume. But we've got to be careful with this because again, the overall market is weakening. I want to see some more strength in the overall market. I want to go from an uptrend under pressure to a confirmed uptrend. I think, and so really until then, we've got to be super careful. But there is a buy point 80.95, and it's called a base on base pattern. It's a good pattern to buy on, and it shows potentially a lot of potentially a good place to be. Macy's here's my current holdings. Macy's, it's up today. This was, Palantir. I do have a fairly large position in Palantir. I really like this one, and I'm trying to build a position in Palantir because I do think that if the market can continue on its upward trend, this should do very well. Still in Robert Half, doing well there. Top builds coming back. The XLE is back. Was up tremendously on Goldman today, up $9.51. So I don't know exactly what that means, but we're up significantly on that, and of course, we're up on Perk and Elmer. So this is kind of the stocks that I'm holding long right now, and that kind of gives you an idea of that on that. So I did want to show you, I did want to show you a little bit on the kind of update you on the trade on, let's see if I can pull this up, on the trade for Tesla, the Tesla spread trade that we had out there yesterday. So let's see if I can pull that up. I'm pulling up the slide deck on that, and I've updated it. So hopefully I've updated it properly. Sometimes I don't do it right. So this is the spread trade. Let's see if I did that right. Did I get that? Yeah, I did. Okay. So this is the spread trade that was on the Action Trade Alerts. I mean that was on that you can take a look at, and let's just pull that up. There we go. Okay, so this is the bull calendar bull calendar spread on Tesla, and then we did enter it yesterday. So I kind of want to update you sort of on kind of where we're at today. The closing price for Tesla today was 751.72, and so therefore, when we opened the trade yesterday, it was at about 739. Actually, I have it at 740 here. So we've gone essentially from it being even on this spread trade to basically we're up about $82. So here's the thing: I'm going to be tracking this, and now hopefully I think we're going to get up to about the the 780 range. And if we do, that's going to kind of be where I want to close it. But we could potentially make on this one, about $1,400, if everything goes right. But this is the trade that I opened yesterday and I put out there. Now, this is an out-of-pocket expense of 903 per contract pair, and you can see I bought the yesterday. I bought the October 780 call, and then I sold simultaneously the October 8th. And this is why it's a calendar spread, because these are different dates. 780 call, and then I received $838 for a total out-of-pocket expense to enter the trade per contract of 903. So this kind of gives you an idea. I have a potential maximum return on this if Tesla moves to 780, which we don't know if that's going to happen, but if it does, then I can make about $13.50 per contract on this one, or a return of about $150. Now, going back to where we entered it here on the 21st, and then today we had a nice bounce on Tesla, so that's the reason it went up. Now, hopefully, if we can continue moving up towards that 780, then hopefully by October, early in October, we could, possibly get close to that 13.59, which is the maximum return. Now, typically, though, if I'm making good progress here, I'm going to be closing it probably at about 50%, and on this deal, that would be, basically about 775 range. So I'm looking to possibly close right in this range. So we'll see if it holds up like that. But when we went into the trade, this was the chart, and you can see there was a bounce, and that's sort of, we're trying to come up to the 780 line, and that's where it will pay off. By the way, if you're looking on TikTok, I'm broadcasting all of these things on YouTube at youtube.com/Dallas Trading Floor. Or if you just want to see everything I'm doing, because I don't have the capability yet of broadcasting on TikTok directly with the charts, you just go to my profile, click on the link, and then go over to scroll down, and then there's a live feed for what I'm running on YouTube. So that's a great way to go there. So anyways, that's just kind of updates everybody on the spread trade that we did on Tesla, and I think that's got to get so kind of in action items, spread trade on Tesla. Hopefully, we're going to move up to about the 780 range, and that, of course, that would pay all the money, and then also possibly looking to nibble a little bit on NVIDIA. I do think NVIDIA is still really good. I just think that the overall trend of the market, we got to be careful with trades today, because we did have a bounce, but remember, this it's not necessarily a dead cat bounce, but it's not, we're not out of the woods yet, is what I'm trying to say. So we got to go much lighter on, we just got to go much lighter on a lot of our we just got to go much lighter on everything out there. Kind of want to show you a live chart of the QQQ, and this is important because the stocks that typically we're trading are basically growth stocks, and they're sort of in the Nasdaq, and the QQQ is the top 100 stocks for the Nasdaq. It's an ETF. If you'll notice, we had this huge sell-off. We had this what they call vertical violation. I just want to kind of show you that. We had on Monday, that was the that was the Evergrande problem. We had this huge vertical violation, lots of selling going on there. Looks like we had a recovery towards the end of yesterday, but we closed at the bottom of the range, and now it looks like we've come back up to the 50-day the 50-day moving average, which is a good thing. So it does look like, at least in the short term, we are strengthening a little bit on the on the Qs. So that's the reason why to consider possibly possibly nibbling a little bit at NVIDIA. Let's go take a look at the NVIDIA chart, and just kind of take a look at sort of what I'm talking about here with the bounce. So this may be an opportunity to get into the stock. As you can see, on Monday we came right down to that 50-day line, 40-day line, and then we bounced off of that, and now We're right back up to the 10-day moving average. That's this little pink line here. So this is a strong bounce, and this is a leading stock. So hopefully, you know, we still could probably start nibbling here. We're right about we're right at the top of the buy range, but we're at the 21-day line. So I am fairly confident that we're going to see, as long as the overall market doesn't move south on us, which it might, we're going to see some strengthening in Nvidia. So I think Nvidia, possibly, if you have some cash, I have a lot of cash now because I've sold out a lot of my positions. I'm looking to rebalance things. I'm looking to probably come into into Nvidia. This is giving us a little bit of an opportunity. Also on opportunity land, I want to take a look at Palantir. PLTR, of course, is the symbol on that one. This one I'm fairly heavily invested in, and it does seem to be it did move right down to the 21-day line, but it didn't go any below that. So I think that there is still some strong buying going on with Palantir. This might be one that you might want to look at. I've been building my position in Palantir, and of course on Monday it pulled back, but I was able to hold through that with a fairly tight stop loss too. I was able to hold through that. So I think that this one, as long as we continue in this upward trend, this might be good. This might be a good place too. But I wouldn't go in with anything more than about a quarter position right now. A quarter position would be the maximum that I would go in, just because this market is still really tender. Now, here's the thing, and it's just a rule of thumb. This doesn't always work, but typically September is the worst month of the year for the stock market. And that's been true for about 30 years. So we're about halfway. We're about three-quarters of the way. We're the third week in September. We might start to see some bounce as long as events don't overtake things. But I do think that the Fed is going to continue pumping money into the economy. Now we're going to see if we get a raise in the debt limit. I just hope that doesn't happen. But if we do, it's likely to buoy up the stock market. So there's a lot of external factors going on right now, so we have to be kind of careful. But typically, September is one of the worst months in the market statistically, and but coming into October, especially the second 2 weeks of October, that's sort of where the fall rally begins. Now, does it happen every year? No, but statistically, the fourth quarter, the fall rally is probably the best quarter. Now, I guess it's because everyone's back at school, but we're basically, we're coming in to the fall now. We're past summer. The September 21st, of course, is the last day of summer. We're the first day of fall. So this is where this does typically start a good, potentially a very good rally. So I just wanted to bring that up to everyone. So without further ado, thank you for holding on for my kind of thing here. Um, and I just want to sort of look at some other stuff here and take the questions. So Farouk basically is talking about Hood. Of course, that's Robin Hood, and that's an IPO. And Robin Hood did. I think it held the record for the most. I think they signed up like 2 million people this year. It's absolutely phenomenal. But and they're doing very well. But here's the thing: I would not buy the stock right now, and I'll show you why. Typically, that we want to wait for what they call the IPO base, and right now, definitely people are looking at this stock. There's no question. But it came out, it IPO'd at 38. It moved right up here to the top was about 84, and then it's pulled back. So it's not time to buy this yet because we want to see some strength. We want to wait until it probably moves at least above 60 and probably more like 70. And the reason why is because basically when it IPO'd, the investment bankers sold into that strength, okay? And then the buyers evaporated, it came down. This is the typical pattern with an IPO, no matter how good it is. And now we're starting to see some uptake finally. But still, right now, I just don't think you can buy this. You're going to have to wait until it shows strength. And I think that the first level that it's going to show strength at is going to be about 60. One of the things I want to show you here is the volume, and this is so key when you're looking at things. You notice how the volume is tapering down. The reason that is because as more and more people buy hood, there's less and less people selling it. So I want to wait until we start to see the price come up and the volume come up. Now we're starting to see that. We're starting to see that. Very little volume and a big rise in price. But what I want to see here, what I want to start to see is I want to see a rise in price and a rise in volume. And we don't have that yet. So right now, what you're going to have to do with hood, I believe, is basically to it's watch list this one and wait for the completion of the I'm going to put in parentheses IPO base. All right. So um, so basically, what we're looking to do here is we want to watch list this one out. It's not time to buy it, though. There's some very good there's some good action going on here with this. There's some good action. I want to show you kind of do a little fundamental analysis here. This is technical analysis here, but when we look at the price and earnings and those kind of things, that is that is what they call um, that is what they call um, that's what they call fundamental analysis. So I'm going to kind of show you that we've had some very nice look at the sales on Robinhood. Excellent. 248, 340, 309, and 137. This is all sales, but remember, they're still losing money. Okay, they're still losing money. They haven't become profitable yet. They're just starting to turn the corner with a 2% cash flow this per share this this quarter. So it's not time to buy this yet. It's not time to buy this yet. It's but it is watch listable, and that's the thing. It is watch listable. So we want to wait until we have the completion of this IPO base. So um, typically the IPO base probably will be complete if we can hold above about $60 a share. So that's where you kind of want to look to possibly get into hood after it moves up. You say, Jim, why do you want to buy something that why do you want to buy something that's more expensive? Why? Because we want to make sure that we have removed all of the quote unquote weak hands, the people that are willing to take the people that are willing to take the bid price and not hold out for the ask price. What makes a stock go up is that you run out of sellers that are willing to take they are willing to take the bid price, and you only have people that are willing to take the ask price. So in order to buy a share, you have to go all the way up to the ask, and that pushes the price higher. So right now we still have a lot of weak hands in Robinhood, and so we need to watch this. We need to wait for the IPO base to complete and it moved on a sustained basis with good volume above about 60. So that's kind of my analysis on Robinhood. Good stock and great question. It's just, we just got to wait on it. It's just not time. It's just not time. So it's a watch list. Let's look at Visa. This is a very good question, by the way. Let's look at V, and of course that's the symbol for Visa. Visa is obviously a much more mature, but the problem with Visa is that we have this downward trend. And I want to show you this. I have a reversal line that I've put in on Visa, and I'm going to reactivate that line. And it does seem like it has just moved above that line, but there's still a problem. And I'm going to reactivate this. I'm going to reactivate this one too because if you can see this black line here, that's the 200-day moving average. Visa has just moved above the 200-day moving average, but it is still very, very, very weak. So I would not add here, but I would consider adding if we can move above if we can move above the 21-day line, which would be about 226. We're at 222 now, so we're very, very close. So here's kind of what I recommend if you are moving into Visa, which I do think is an excellent stock, by the way, and it's the kind of stock that that you could definitely move into. But what I would recommend on this one is doing a buy stop limit order with the stop price being equal to where the 21-day line. And I know this is kind of I hope I'm not I hope I'm not being too obtuse, but 21-day line, which is about um, which is about 225.50, and then I would put in a limit equal to 225.60. And basically, what I'm doing here is that I think the way to buy this is as it's reversing higher and moving beyond this 21-day line and getting some support, because it looks like based on the volume, it looks like the weak hands are being taken out, and we're getting people fewer and fewer are willing to sell. So as you can see, the volume's tapering off and the price is going up. That's a very good sign, because that means that people that have been holding this are now um, are now you know people that have been holding this are now less willing to sell. So we have more strong hands, and that will make it move up. But I want to see it. I want to see it confirm that 21-day line, and here's how to do it. There's a special kind of order that you can put in called a buy stop limit order, and basically what it does is it doesn't activate the order to buy it until it gets beyond a certain place, the stop price. So if with a buy stop limit order, if the price of Visa goes above 225.50, then an order to buy shares at 225.60 is placed, and you will capture that. And the reason the advantage of this is that this kind of order will only activate if the stock is moving up. And that's so important. You don't want to catch a falling knife. You don't want to buy a stock as it's pulling lower, and that's the way most people buy it. So even if you're buying, the only other choice is doing a limit order or a market order, and I don't like those when you're trying to get a reversal, like with Visa. With Visa, you want to make sure that it's moving up, and then you want to buy as it's moving up. And that's what this buy stop limit order does. After it moves above 225.50, then it's activating an order at 225.60 to buy to buy the shares. Now, on this one, I probably would not buy any more than about a quarter or a half position. And what do I mean by that? Well, what I mean by that is think of your portfolio as a pizza, and the pizza has 8 slices. That's one full position. So no matter how good a stock is, you never want to buy more than one full position at a time. So even if the stock is looking great, you never want to buy more than you never want to buy more than about 10 to 12% value in your portfolio at any one time. So with but because we're in a market that is weak, it's been pulling back. We're moving from a confirmed uptrend under pressure. We want to buy less. So if we did this buy stop limit order, I would recommend only doing a quarter position, which would be a position which is 1/8 uh, and 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 um, and basically a quarter of that. So basically, I'm looking, to possibly go in with about 4% value in the portfolio. So a full position is 1/8, or about 12.5% of the value of the portfolio, divided by 4, and that's going to give us, that's going to give us about 3% of the value of the portfolio. That's the maximum that I would go in there. But um, I think that Visa is a very good buy, and it's potentially good. But don't jump the gun. That's the main that's the main thing. It's very tough. Let's take a look at Dinesh. Thank you. Um, how would you approach apps? I'm in at 50. Nice, which is currently exploding. I already took profits at 65. Pyramid and again, I probably would. Boy, that's great. I wish I was with you on that one, Dinesh. That's excellent. That's excellent. Let's take a look. You're in at 50. Boy, that is very nice. Let's kind of analyze that chart, Dinesh. I really like it. So you're in at 50. So you're right in here. Wow. Boy, that is very nice. Look at that. Look at that, everyone. It's right in there at 50. Beautiful, beautiful. I would be a little bit. I probably wouldn't have done this. I probably would have done this. This is a little bit bold here to buy it at 50, but it's a great company. You bought it at 50. I probably would have waited until it moved beyond the 200-day line. I probably would. I'm more interested in buying it right now, but it does look like indeed we do have a reversal. So I'm going to put the old reversal line in here. What do I mean by this? Well, when a stock starts to move and change direction, right, for from basically March until really recently, Digital Turbine was in a downward trend, and you can see that's why I drew this line through the peak and then several intermediate ones. So this is, as long as the action is below this line, it's declining. But now we have crossed above this reversal line, and now the direction has changed, and you can see this also by the, and this is very interesting, I think. We can also see this by the volume. Do you notice how the volume is falling off, but the volume, it's mostly buying volume in here. Look at that. Isn't that good? Boy. And so I think it was very smart that you sold into strength at 65. But here's the thing, I would probably be interested in buying more. I wouldn't buy a lot more, but I would start the pyramid because now when you're pyramiding, the way I like to do it is one third, one third, one third. So if you've got a one third price, at if you've got a one third price at 50, then you could go in and your average price with another third or maybe so size of position, you're going to raise your cost, your average cost, but you're still going to be right at 60. So that's an excellent turn there. That's an excellent turn. So I think that you could continue to just add to the position. Now I wouldn't. Now here's the thing: you don't want to you want to go in usually a third, a third, a third, or a half, a quarter, because if you go in heavier than that, typically you tip, oh um, let me just I've got to take this call just a second, and let me just do this off the air. Hold on one second. Hi, Mervin. All right. I guess that call did come in. So I'm gonna call back here in just a little bit. So anyways, that's how I would handle that. So, but very congratulate yourself. That is a very good move. It's a good stock as well. I mean, Digital Turbine is excellent, but I definitely would consider definitely consider moving into that a little bit more. So let's look at the next question. FRSH. This is not a stock. I don't know if I'm FRSH. I don't know if I'm what I'm doing on this one. Freshworks. Ooh, I don't think I would probably be into this one. I think I know the company. It's sort of like a cloud-based it's sort of a cloud-based thing. You know what? I'd wait on this one. I would wait on this one. It looks like it's just IPO'd. I would wait. I would wait until it forms a base. So that's my humble opinion with Freshworks. I mean, it may be very good, but I think the thing is you just wait until it forms an IPO base. So this is a watch list. That's basically the that's basically how I would say it. So basically, I think you got to wait on this one until it forms an IPO base because this is just not ready to go. It just came out of the door. I think you want to see it make a. Let's see how this one trades. There's a lot of there's apparently a lot of selling going on. So this is an IPO just come out. And but I wouldn't buy it until there's an IPO base. It's only got a 33 checklist, so I, I IPOs are tough to buy. They can be very profitable, but typically I like to let them season and get into them about a month, at least 3 months into them, to see how it's going to trade overall. But this is a watch list, so I would wait until it forms an IPO base on this one before I would get into it. I just would. Uh, Sorry, I sneezed there. Sorry about that. Anyways, well, thanks for that. And that's a very good question, interesting, and thanks for bringing that to my attention. I hadn't been following fresh fresh books. I know they have a lot of users, and it is a competitor potentially for Intuit. Buying Facebook for the long term. Well, here's the thing. Um, and I want to put this out there, and I know this sounds kind of harsh, and I don't want to be harsh, but you know what? In the long term, we're all dead. Okay, so buying for the long term is not necessarily the best strategy. I mean, yes, some people just set and forget and they never come back and they do that. But you know what? If you get a violation, this is why you use stop losses. You just don't. Sometimes you're right and you can ride something and it's just great and it's going to be right forever. And Facebook definitely is in that category. But here's the thing: it's you notice, this is why stops are so important. We've lost support here at the 58 hours. We've got a lot of selling. This is a sell signal, folks. This is a sell signal. Okay, volume is dropping, volume is increasing, and price is dropping. Okay, what that says to me, and as you notice, the prices, if you look at the last thing, more and more people are wanting to sell. You see how that is? See how that is? So the price is dropping, more and more people are wanting to sell. Until it reaches equilibrium, I'm afraid it's very likely that Facebook is going to continue down. Why? Because you see that ramp up there? You see how more and more people want to sell and the price is going down? That tells me that there's more sellers, there's more what they call weak hands who want to sell than there are strong hands. So right now, I would not be holding this if I was down more than 7%. So I think it's very, very important that that you that you're prudent about this. So here's what I would do. And I know this can be painful. So I'm not trying to you know single anybody out here, but you want if you are down more than 7%, sell. I just and wait for another uptrend. You just want to do that because you want to wait for that next uptrend. You want to sell. Oops. You want to sell when you can because it looks to me based on this chart that we're going to see a little bit more, possibly a little bit more deterioration. Now, will that be the end of the game? No, it's probably going to come down and probably come down to this black line. That's the 200-day moving average. It's right here. Okay, that's probably where we're going to get support. Now, I may be totally all wet. It may just reverse and go higher, and then you say, Jim, you're wrong. Well, yes, I've been wrong many, many times, many, many times. But what I want to show you here is how it's trading. You notice how every time it sort of bounces, it bounces there, it bounces there, it bounces there, it bounces there. It's getting support basically on these index lines. What happened on Monday was it lost support at the 40-day line and it just kept on dropping. Now it did come back a little bit yesterday. This is what they call a dead cat bounce. It dead cat bounce, but today more selling. So I'm seeing more people want to sell right now. that want to buy, and those are called weak hands. And so the weak hands are in control. The volume is moving up, and the price is moving down. So I think that with Facebook, we're probably likely to see it get support right here at about this black line, and that would be if we were at that black line, that would be about 310. So I think this could possibly fall and easily fall another $30 a share, about or approximately 10%. So I think that we could lose another 10%. So wouldn't it be better to sell now and then wait to see if this thing goes down and get support at the 50 at the 200-day line, and then as it's moving up, buy as it's moving up. Remember, you don't want to catch a falling knife. That's the thing that you've always got to be. You always got to remember, and this is an extremely hard lesson to learn. I'm not sure that I'm not always right on this, but statistically, you don't want oops, to buy a falling knife. And that's a really good that's a really good thing. You always want to buy something as it's moving higher. You just don't want to buy a falling knife. And right now, with Facebook, at least in the interim, it's probably going to go. It's probably, unless it reverses, which I don't think it's going to, because I'm looking at this relative strength line. I think it's going to get support, but I think it's not going to get support at the red line. It's going to get support at the black line, and that's the 200-day line. So I think this could easily fall another 10% or $30 a share approximately. So here's what I would do if I was down more than 7% on this one. I would sell it and wait for a better trend for it to trend up. So you don't want to be buying as it's trending down. You just don't want to do that. Great question from PP on the GBTC, and of course, um, this is GBTC is about 4% of the world's Bitcoin, and right now I think that there is going to be some weakness in Bitcoin because here's what's happening. Um, right now, there's Chinese companies that owe a lot of money, mainly property companies that own a lot of money. One is called Evergrande, that's borrowed a lot of money from BlackRock in New York and a lot of other people, and they owe those debts in dollars. So they have to come up with dollars. Well, the only way you can get dollars, of course, is by selling things that people are willing to pay dollars in. Now, the traditional way of doing this, of course, is to sell things like oil, which are denominated in dollars, and then those dollars you can pay those debts off. So you would think that when there's a panic, you would think that when there's a panic, that the price of gold would go up and the price of Bitcoin would go up. Well, not necessarily, because the real panic is in the supply of dollars to cover the debts, these bond debts. And so that means that there's a temporary shortage, even though the Federal Reserve is printing money like there's no tomorrow. There's a tip, there's a flow shortage in the amount of cash out there, dollar denominated cash. So Bitcoin, people are going to be selling their Bitcoin holdings to get cash, US dollars, to pay these debts that are in China, that are mostly, but there are in other places too, that are denominated in dollars. So even though over the long term, Bitcoin probably is going to go up, in the short term, it's probably going to be pressured to go down because of the need for dollars. People are going to be selling their Bitcoin holdings, they're going to be selling their gold holdings in order to get cash to cover the debt that are on these defaulting mortgages in the property market, primarily in China, but in also other places too. So it seems absolutely counterintuitive. With they're pushing, the Federal Reserve is pushing all this cash into the economy, and you're like, well, wait a minute, shouldn't I mean, obviously there's lots of cash running around. Why is the value of gold going down? Because we've all been told since the time we were, small, gold is the inflation hedge. Well, it's not really. I mean, it's not as much because you can't use gold to pay bonds that are denominated in dollars. So right now, there's a shortage of cash to pay the bond interest that's due on the company on the investments primarily in apartments and stuff like that in China, and because of that, there's not enough dollars. So many of the Chinese investors are liquidating their investments, both in the United States and in China, to get dollars to pay those bonds back. So that's why you got to be careful. So here's the thing with the GBTC. Right now, the GBTC has pulled uh, right up to the 40-day line. I don't think it's a good time. It's I don't think it's a good time to possibly buy it. I want to see it reverse above about 41, but right now I'm a little bit leery with the price of Bitcoin. Right? I mean, with the price of Bitcoin right now, I think in the short term, Bitcoin could weaken and fall and fall somewhat. So we've got to be very careful. So right now, I think I would be a little bit careful, a little bit shy about the GBTC, at least for right now. But if we get a strong reversal and it moves above about 55 on the GBTC, and it's up today, it's up 5% today, and we may be seeing that very soon, then I think we could possibly move back into it. But remember, I still think that even though it's turned up today, the GBTC, I still think that it's relatively, again, at least in the short term, it's weak, and the price of Bitcoin is weak. Not because Bitcoin is going out of style, but because people are liquidating it to pay dollar-denominated debt. So I think you got to be careful. I would wait on Bitcoin. I would wait on the GBTC until we see at least above 48. It's currently at 34. So I would kind of watch this one. That's sort of how I would play it. But it's hard to, this is not a science. This is mostly 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 an art form. So right now, I think you got to be careful. Good question. Thank you, Harry. Curious about the software you're using to show the charts. Thank you very much. Well, I use a streaming software called I use streaming software called StreamYard, and basically it allows me to show other. I have monitors around that have the charts on them, and I basically show uh, those charts. But it lets me create a mosaic of different overlays in order to do that. But thank you very much. That's what I use. It's called StreamYard, and it's worked pretty good. Jim, I am about 5% down on PayPal. Time to hold or double up. Well, here's the thing, Ricky. I love PayPal, as you know. I'm a big fan of it. I think it really is sort of the future. I think you know I I believe it's sort of I think Visa and Mastercard are sort of the past, and I think PayPal is the future in terms of in terms of payments. I've had a PayPal account now for God, it's got to be 20. It's got to go be going on 20 years. I think I had a PayPal account way back in 2000 or sometime around that. It was really early. I've had it forever. But now I think it's finally starting to come into its own. I mean, it's more than come into its own. Now, I am seeing that we are getting some support at about 266. So I like that. Now, if you're 5% down, I wouldn't be a seller right now. I wouldn't be a seller on that. I mean, 5% is not, I want to see it go to at least 7% before I'd be a seller on this. It looks to me, Ricky, like PayPal is getting support at the 200-day moving average, and this is very good because this is showing that even though it's a weak market, PayPal is getting support. So I really like PayPal a lot. Also, another thing, I'm looking at the volume here, and if you'll notice, the volume has been going down. And you say, well, Jim, why is that important? Well, if the volume is going down, that means fewer people are willing to sell. And it looks as if the people that are willing to sell are now, based on this blue bar here, they're only willing to sell really at the ask price. So I think that we've hit a bounce here. You see, I think it's going to bounce. I think it's bounced right at the bottom of this consolidation. And so I do believe we're probably likely to see this one trade up at least in the next few days. I think we're likely to see it trade up. Now, there are some concerns here. 68 is not the greatest on the relative strength. I would like to see 80 there. But overall, the checklist, I mean, it's not a stellar checklist. I would like to see a better checklist, but overall, I think this is a very, very strong stock in a very strong area. And I don't think being down 10%, I mean, being down 5% is enough. Now, at 7% or 8%, I'm probably a seller, okay? but I'm not a seller at 5%. I'm just not. I think you need to possibly hold this one and maybe move the stop loss up a little bit. But I think that I think that it's looking very good. I think it's a great stock. Currently, I'm not in it, but you know what? If this thing reverses above the 40-day line, I'm probably back in this one. Right now, I'm not in it because it's violated several of my rules. It's below the 40-day moving average. I don't like to hold it below that, but the fact that you have it and you're down 5%, that's not the end of the world. I'd hold this one. All right. Let's see. Ocwin, OCGN. I think that's a loan servicer, I believe. OCGN. Let's look at that. And that's Aquin. Yeah, Aquin. Uh, no, I'm sorry. I apologize. I thought that was a loan servicer. This is a this is a company that does eye diseases. Boy, I just I tell you, I just don't have the expertise for a company like this to do any fundamental analysis on this. So all I can do here is the technical analysis, and what I'm looking at is I'm looking at a trend, and the trend I'm looking with, unfortunately, see, that's the trend line. Is this, you've heard the saying, the trend is your friend? Well, this is the trend line, and right now this is trending lower based on this quick analysis. So even though it has a relative strength of 99, and and the volume is looking good because it's falling off, but it looks like we're in a very tight pattern here. So this one might bounce higher. But here's the thing: it's got a number of check marks against it, and especially in this market, I am going to be extremely careful in that it's less than $10 a share. So I know that that's an issue, but it's only got a 56 checklist. See, I want 100% checklist or 89 checklist, and I want them in a better area. Now, this biomedical's not bad, 40 out of 197 in terms of that, but I'm still really really leery. Maybe what you might consider instead of this one, a little bit safer way to invest to get exposure to this area is with an ETF called the BIB. And what this is that you see how the trend of this is up, even though it's very very noisy here. This is a great way to get exposure to the biotech area, which is a great area, without having to pick individual stocks. There's more stocks that are in the biotech area. The medical area is very crowded, so it's very hard to pick the right winners. Um, so what I recommend for this area is considering a biotech ETF, and that's the BIB, because I think it's a little easier. But that's my take on it. So I probably would not be in that one just based on that. All right, we'll take another question, Gary. Thank you very much. These are great questions. Palantir, I did cover that a little bit, but let's. Um, I'm currently in Palantir myself, and I do really like the company. And I did buy it. I've been buying it and accumulating a position as it's moved above the buy point and it's reversed. This is the reversal line, this black line here that I've drawn in here. We've definitely moved from it going lower to basically about at the beginning of August last month. That's when it changed, and it changed character, and Palantir started to move higher. We moved past this cup with handle, and we got to this first buy point, which was 25.94. Now it's held above that, even though the market has been, even though the market has been, um, has really is really weakened. But here's the thing I like about Palantir. Look at this volume. This is very interesting. We've we've got we've got the prices are going up for Palantir, but the volume is going down. So what that means is that the weak hands are getting pushed out. And so instead of being able to buy this at the ask prices, and instead of the weekend selling at the ask prices, I mean the bid prices, excuse me, in bid prices, they're having to pay they're having to pay the ask prices. So there's more strong hands in this, and I think we're starting to see some nice strength. And this is the key. I think that we're seeing some strength in Palantir now. Um, there's a lot of interest in this issue. This is a it's got a very very good checklist considering the age of this stock. I mean it was an IPO, so it hasn't been around for 20 years. So we have a very good checklist. We have 7 out of 9 criteria. Our EPS rating, earnings per share, is less than 80%. Okay, it's a relatively new company. I could take it, and it's more than 15% off its all-time high. But it makes all the other criteria. The relative strength is 80%. That means it's in the top 20% of shares right now. It's being accumulated by the funds. This is A, B, or C, so it passes that. The earnings per share percentage gain last quarter is 20%. You see, right there, sales gain 20%. The current price is above $10. So a lot of good stuff is going on with this stock. Let's look at the number of funds that are investing in it. And this is key. Last quarter, there were 193 funds. Notice how every quarter the number of funds goes up. But last quarter, it was 193 and it's 517. So that means it's more than doubled since last quarter. So I really like this. I really like this one. I'm going to take a look at all of the funds that are basically in that are basically in Palantir, and you can see many of these are A plus funds. Look at that. Vanguard. Vanguard's in this heavily. So there's a very strong fund ownership here. I think this if it can hold up, this is probably in the next in the next few months, this is probably going to be become one of my major holdings based on the strength that I'm seeing. Now, can I be wrong on this? You betcha I can be wrong on it. But what I'm seeing here on Palantir is that this might be a good time to start accumulating Palantir because the funds are accumulating Palantir. And it's true, you don't want to catch a falling knife, but on the kind of the flip side of that, a rising tide, raises all boats. I think that's how you say it, and that's what we have. We have a rising tide of fund ownership on Palantir right now, which is strong. And so if you just get in that boat, you may go up a little bit. So I think it's a good time to pot. I don't say go in, with both feet. I say, gradually come into the stock. I'm probably going to be much more invested in Palantir by the end of the year than I am now. I've been buying it, I've been accumulating it. So I do think that based on what I'm seeing with many of the funds that are in it, the very good A plus funds, and the action of the stock, I think that it may have been based, and now it may start its run up. I'm hoping that's the case. But I think it's a very good stock, and I think that's the one you can put at the top of your list. That's the one you could definitely put at the top of your list. Okay, thank you, Stevie, for this. Um, thanks, thanks for saying that. I do appreciate it. I have a face for radio, so anyways, let's look at WNT. Of course, this is you know, one of the great stocks. Also, Walmart. I don't think I don't think people are going to stop shopping at Walmart. Okay, at least not right now. I'm shopping. I shop at Walmart all the time. Now that said, do you want to hold Walmart at this level? Well, this is kind of a slow and sure wins the race kind of stock, which is a good thing. I mean, Walmart is in a consolidation range. It's basically consolidating from there to there, and currently what we did is that it basically what Walmart is basically has a floor about 126, 125, and a ceiling of about 152. Okay, as you can see, it came right up to the ceiling. It couldn't push past it, and now it's going to go down. So it's probably going to fall a little bit. It probably is not going to fall all the way down to the consolidation here. I doubt that, but I have a feeling we're going to see it fall down to probably this line here. This is the 200-day moving average. The reason I think that is because many of the trading platforms are algorithmic. And what they'll do is they'll trade on a particular index line. This is the one that almost all of them use. It's the 200-day moving average. Most funds will not buy something that's below the 200-day average. Now, they may hold it, but they might not make any new buys. So I do suspect we're going to probably get some support there. I don't know if we are, but that's what I'm suspecting. Here's the thing with Walmart. I think that, that we're coming into this is probably going to be its best. Typically for retail, their best quarter is the fourth quarter. So this is not necessarily a bad time to be in it. But I just don't think the performance of this. I don't like it as much. Their sales were up 2%, which for Walmart, believe me, is huge. It's absolutely huge. But I want to kind of show you the fundamentals on this. Um, we typically want to buy stocks that are increasing in sales 20% a quarter. If we can do that, we're going to probably find a stock that's going to move up much faster. Now, these typically are growth stocks, and they're not going to be the size of Walmart. Believe me, 2% increase in sales in a company like Walmart is tremendous because it is such a big company. They have the most revenue. Now, one thing I do like about Walmart is we just continue to have these very nice profit numbers. They're really good. But I don't believe this one should be the and we have great cash flow. The question is this thing overvalued? It's got fairly stable earnings, and the return on equity is 20%, which is phenomenal. But right now, I just at least in the technical action, I probably wouldn't. This probably would not be one that I would chase. I want to see this thing, see if it gets some support at the 200-day line, and maybe you could buy it if it bounced off that. Uh, and I do think that we're starting to see some support, but I just think with Walmart, I wouldn't be selling my position, but I probably wouldn't be buying anymore at this point. Let's look at another stock, the Dow component that's everybody knows about. And of course, there's only 30 stocks in the Dow, and this is Boeing. This is the largest for many years has been the largest exporter. I wish I had better news on Boeing. I love this company, but I don't love their stock. I mean, I love flying in the airplanes. I think they're great, but I just don't like the stock. Currently, I have a reversal line on this one, and it's trading below that reversal line, so it's in a downward trend. Even though we were up today, you see, we're up, but we're still in a downward trend. So overall, um, you know, I want to see a change in the direction of the stock. I want to see a change in the I want to see a change in the direction of the stock. So right now with Boeing, so BA is currently in a downward trend. Currently in a downward trend. So so no buy. That's really my take on that's really my take on Boeing. It's just in this downward trend. So it's just not something that we can probably look at. I want to see it move above the 200-day line, and that's be at the very very minimum. So I am not as interested right now in I'm not as interested right now in Boeing. Well, I'm going over, I've gone over the hour here, and I really appreciate I really appreciate. Now, this is interesting. So you're saying that okay, Tesla. Okay, let's do Tesla. I just really quickly because I do have a spread on it. This is something that you might want to look at. I think it's still out there, but let's look at Tesla. I think you could probably still get into this trade. Yeah, we had a very nice bounce on Tesla, and it looks like we're holding on to it after hours. That's looking good. Yeah, that's looking good. I think Tesla has reversed and it's above that 200-day line. It's still weak. I mean, I wish this was stronger, but at least from here until about 780, I think that we could still probably do well in this spread trade. If you're interested in that particular trade, I do have it available. Let's see if I can. Oh, there we go. No, I didn't. It didn't go. Let's see if I could show you. Let's see if I could show you that trade that how to get on that. So basically, what you need to do to take a look at this spread trade is go to www.dallastradingfloor.com, and basically what it does. Oops, did I get that right? Dallas Trading Floor.com. All right, there we go. So basically, with DallasTradingFloor.com, it's going to look kind of like this. When you get on it, it's going to look like that. And where the trade is right there. It says bullish calendar spread on trades. Just click on that, and then this is how you get. This is how you got to take a look at it. Bull calendar spread on calendar. And that we did this one yesterday, but I think it's still valid. I think you can still enter this one, first, last name, and an email address, and then click there, and it'll show you the deck, which is a good thing. So until 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 tomorrow at 3:30. Thanks everybody for dropping by. If you want to get on the action trade alerts again, super easy. Just go to www.dallas the trading floor, and that's a great way to go. To get on those free trade alerts. And if you want to be part of our Discord community, I mean, we have a lot of people that have been very successful in the Discord room. Now, this is a pay service, but we do have some very, very successful people in the Discord room. That's also available at www.dallas trading floor. So until tomorrow at 3:30. Thank you, everybody, for taking a look. Oh, one last thing I want to add. I'm trying to get this all in. I'm trying to remember to get all this stuff in. Please, if you're watching us on YouTube, please like us. Okay, like and subscribe. That would be very nice if you did that. That helps me a lot, believe it or not. And so, like and subscribe if you're on YouTube, and of course, like me if you're on TikTok or on LinkedIn. We're on a lot of different platforms. So until tomorrow at 3:30. Thanks, everybody, and I'll see you. I'll see you on. I'll see you tomorrow, and happy trading.